All right, we are recording. This is another live stock review. I'll go ahead and share my screen and we will dive into the first stock we want to look at today. Just getting organized here. And we are sharing. This first stock would be Intuit. So like I do on the YouTube videos, this is essentially a look over my shoulder to see how I analyze stocks. There's a feature in Tykr called the 7. We're going to walk through this manually just to give you really good context on what we need to look at. Fortunately, Tykr does a lot of the hard work for us. This is probably only going to take a few minutes to go through, and then we can move on to the next stock. Now, before I dive in, if you are interested, you can go to Tykr.com, go to education, and then down to calculations. Our calculations are open source, meaning you can see the math. And if you'd like, you can go create your own version of Tykr. Of course, we hope you still continue using our platform. All right, so we're going to walk through the 7 here. This will really give you context on the power of the tool. And there are these little helpful how it works buttons you can use on your own to really get a good idea of what does what and what the ratings mean. But let's go ahead, we'll start. So the first thing we want to do is look at if stocks are on sale, watch, or overpriced. And Intuit we can see is watch. I'm going to open up another window here just to show you my watch list. This will give you really good idea of how Tykr works. You have those 3 ratings. This is very much inspired off a traffic light. When I first created Tykr, I had to think of, hey, what's an easy to understand rating system? And I thought, you know what? The traffic light does a pretty good job. So we can see here, on sale, watch, overpriced. And only about 15% of stocks in the market make it to on sale. It's very hard to achieve. So this one's sitting at watch. And the reason is, we'll break that down. We're moving on to step 2 of the 7, which is we want to see a score in this hexagon, a score of 50 or higher. That's the overall financial strength. And we want to see a margin of safety of 50% or higher. So we can see here, this is at 45%. So one is above 50, but both are not. So that's why I'm going to go ahead. We got more people joining. I'm just admitting them to the call. All right, I'll keep going. So we do get a point on the score here, but no points here on the margin of safety. So that's 3 steps of the process. Then in the middle, we have the 4M confidence booster. If you guys ever use this tool or have not, I'll kind of show you what this looks like. This first screen here, it organizes what are we looking at? What are the 4Ms? And I give all the credit to Phil Town for really teaching the concept of the 4Ms, but Warren Buffett and the late Charlie Munger, they were a big inspiration behind this, because you want to not just look at the math part of the company, you want to look at the business. So the 4Ms are the math, meaning is how the business makes money. How many revenue streams does the business have? How scalable are those revenue streams? And then you have the moat. That's how business compares to other businesses in the same sector and industry. And then you have the track record of the management. That would be the CEO. Moving on to the next screen, we can see here, we're going for 80 to 100 on the high to get high confidence. Anything 60 to 79 is moderate, and anything 59 or lower is that's low confidence in the stock. Now, for context here, probably the 2 most frequently asked questions we get are, when do I buy and when do I sell? So in the onboarding, if you haven't seen that, what we teach is you want to buy stocks that have a summary of on sale and a 4M of 80 or higher. To sell a stock is when that stock flips from on sale to watch or overpriced, and that 4M score is 59 or lower. And the 3rd step of that process would be, and you're profitable. There's a rule out there, Rule 1 investing. Phil Town actually uses that as his brand. But it's really taught by Warren Buffett, which is you want to make sure you don't sell stocks for a loss, to train the discipline, train the behavior of when stocks go down, don't freak out, just wait for the market to rally again. And in most cases, it's going to lift it back up, and then you can sell for profit. I have not sold a stock for a loss in probably over 10 years. Just thanks to those guys really following that discipline. All right, let's actually walk through this experience and then we'll wrap up this first 4M and then we can move on to other stocks. So the next slide here breaks down the math. You can see here the summary, score, margin of safety, all in one clean location. All right, the meaning, OpenAI is going to go to work here and it's going to kind of summarize how does Intuit make money in simple terms. All right, we'll give it a few seconds. There we go. Got a lot built into this business. Intuit is, I have followed Intuit for years. I really do like their business. You got QuickBooks, TurboTax, they've got Mint, payroll services, and you can see your revenue scalability is 9.5 out of 10. They've got a lot of SaaS products, software as a service, those subscription products, all within the same company, not just one SaaS platform, but multiple. That's a great place to be. All right, we'll keep going. Next up, how does this stock compare against the market? 65% is the alpha, what we're looking at here. That's great. Let's keep going. This next question is unique to you or I in this case, and this is really Warren Buffett giving guidance here, which is wise investors should only invest in what they know. So I know Intuit actually pretty well, but I always say this, if this was a pharmaceutical stock, I am not the expert on pharma. Pharma can be also quite risky, but in this case, I'm adding another person here to the call. There we go. In this case, I do know a lot about Intuit, so I'm going to go very high, but please answer these questions based on your interests. All right, if you guys are just joining the call, we are walking through the first stock here, which is Intuit. We're using the 4M Confidence Booster tool and just kind of taking our time, and then we'll move on to the next stock right after. In fact, I'll take requests from you guys in the group. All right, let's keep going. We'll hit continue. Next up, we've got the moat. This section, I could not wait to get this done with Tykr and using OpenAI, because the manual process of doing this for him, it could take you a long time. It could take you hours, if not days of research. Well, check this out. With OpenAI, we actually use the tool to grab a few stocks from the same sector and industry. Sometimes they may feel like they're not direct competitors, but they do if you ever look on the details tab of a stock. In fact, we'll just click on Adobe. We're not going to do a review quite yet, but you can go here, go to details. Stocks fall into, you can see here, let me take a look. We've got sector and industry right here. So we're using the same sector and industry in this case. And we can see here, how does it rank in 5 different categories? So we've got the summary. They are second place, tied for second. Score, actually first place on this list. That's great. Next up, margin of safety. They are third place. Revenue scalability, first place by a long shot. Beating Salesforce, that says a lot. And then alpha, also beating Salesforce, looking good. So we're going to get some points there. That's great. Let's keep going. All right, management, we're actually almost done. We're going to use OpenAI. It's going to summarize the impact management has had on the company. Also a 9.6 out of 10. That is awesome. And the last screen here, you can skip this. This is optional. We do use an average behind the scenes. We do see some numbers already put in place because we do pull the averages that were entered for this stock. But long story short, there have been a lot of studies done that if you have a higher Glassdoor rating, you actually do have better performing stocks in the market. The long story short, if you treat your employees with respect, you actually get better results. What a concept. But in this case, we can see here the latest Glassdoor rating on a 5 scale is a 4.4, which is great. And then look at that. CEO approval is 92%. Getting above 80 is it's pretty tough. So good job Intuit. All right, we're going to click continue and we're going to see what we get. 88. Wow. That's really hard. It's very hard to get above 80 on the 4M. This is very rigorous. All right. So to jump back to the 7, that's what we're walking through as we speak. We get a point there. We can see the average in the community is at 81. I'm going back here to the tab. You guys can actually see other people in the community. This is a little preview of what's coming in early 2026. We're going to be launching a community feature that allows you to follow your friends. You can also see their portfolios. You can also become notified when they buy and sell stocks. Just a lot of cool features will be built within, but this is kind of the first little preview of seeing other people, what they're doing in the platform. All right, let's keep going. Next step. We're looking at the 5-year returns of the stock. And I like to set my stock charts to 5 years. If you're not sure where to go to do that, I'll show you here. You go to your profile, go to notifications and settings, and then you can select your default here. I like to keep it on 5 years. We'll go back to Intuit. The reason is we look at 5 years, and the number we're looking for is over 80%. So we see here 76%. We're not going to get a point there, but here's the reason why. We know that past performance does not guarantee future results, but we like stocks that consistently beat the market year over year for 5 years. So there's some of the stocks I hold in my portfolio, like NVIDIA and Palantir. They're well over that. It's very consistent. We like that. So in this case, you're still making a profit, which is good, but you're not really beating the S&P 500. Doesn't mean this is a bad stock, but again, we're not going to get a full 7 out of 7 on the points. Let's keep going. Next up, go to the financials tab. And the number one most important line we're looking for on the financial statements is EPS. That's earnings per share, essentially the profits of the company. And what I like to do is you go to quarterly, and we'll go to earnings per share, and we can see here we went 3 quarters in a row. Now, this business, as you can see here, April. The reason is tax season. A lot of people buying their subscriptions and then they're unsubscribing. It's just one of the cons of the business, nature of the beast. But if Intuit continues to buy other businesses over time, it will kind of smooth out those revenue streams. But that's why we see those big spikes here on the revenue and then the profits. So we're actually not going to get any points here. We do see 2 quarters in the row of the increase, but not 3. Last step in the process would be earnings calendar. We can see here, we did beat the latest estimate. And I'm just going back in time. This is always pretty cool. Okay, so the last miss they had was in 22. That's pretty consistent company with beating their estimates. I'm going to say one thing here, then we're going to move on to the next. We'll click on the 7, and then we'll move on to the next stock. With earnings reports, every quarter, this is really important to pay attention to, is there's really 2 reasons why stocks take off or fall off a cliff. In other words, share price goes up or share price goes down. And at the earnings report, when you have a stock that is increasing its EPS quarter over quarter is 1, and 2, they are beating their estimate in most cases, not all, but most of the share price does go up. And then, of course, if you see a decreasing EPS and you miss your earnings, in most cases, not all, of course, but most, the share price does go down. It is, again, the number one most important line on the financial statements, and that's what a lot of large financial institutions look for at those earnings reports. Now, over the last 3 months, we've seen a lot of volatility in the market. Even though businesses have a strong earnings report, share prices are falling. The reason is there's this concept called guidance. Guidance is, it's kind of like the projections of what we believe will happen in the future. I do not care about guidance because it's what we think will happen. I like to use the facts. Value investing is all about using the data, what happened in the past, to calculate where things are going. But when you hear something in an earnings call, like, yeah, we think, the next quarter will be, okay, but not as good as the last. That is very subjective. It's not mathematical. It's just kind of like, thrown out an idea of where things are going, and Wall Street does not like that. Large institutions will sell off with a comment like that. So when I hear, C-level executives, or like for example, your CEO, your CFO saying something like that, like, what are you doing? You're shooting yourself in the foot here. So I recommend to leaders of businesses is state the facts and then talk about something you're working on in the future, not where you think things are going with a business. Like, for example, at Tykr, We are private, but we do operate like a public company. So we do earnings calls to our investors. And I will say, I'll say this. I don't say where we think it's going to be higher or lower than the previous quarter. I will say we are working on this feature, or we're working on this addition to the platform because our customers are asking for that. It's like we want people focusing on those things, not where we had EPS of 1.75 last quarter. We think it's going to be 1.77 next quarter. Like, no, not smart. All right, we'll click on the 7 here. I think we're going to get, I always do this. If you watch the YouTube videos, I think as we went through, we're going to get a 5, probably a 4 or 5. Oh, 3. I missed it. Okay, that's right. The summary is a watch. Okay, very close to on sale because they're you can see here the margin of safety was at, if it's at 50%, then we jump up to 4. But yeah, in this case, I'm going to go ahead. Let's create a new watch list. We're going to kind of rank order, the top stocks in today's call. Of course, don't buy and sell stocks based solely on what you hear. Only buy and sell stocks that align with your own personal financial goals. So this won't be financial advice, but it'll give you a fun idea of like, hey, what are the strongest stocks we talked about today? And then we'll rank them down to the weakest. All right, so let's create a new watch list. I'm just going to give it the today's date. Here we go. 9, call it good. And then you'll see here, we've got that watch list created and we've got Intuit sitting there. So there's one we walked through. We'll speed things up a little bit here, but I wanted to give you good context. But in the chat, or you're welcome to jump or turn on your mic. I'm interested to hear, what do you guys want to take a look at next? Hood. All right. Sean jumped up and said Hood or Mara. All right. I just want to take a look here. That's right. Marathon. Yep. And then let's go to Hood. Both are good choices. Let's go. We're going to do Robinhood first because we can speed things up a little bit here. Give me a second. I'll grab some water. All right. All right. So Robinhood. I like Robinhood. I can tell you this, just to give you guys a little look under the hood or kind of describe it. We have this broker connection feature. We've been connecting with whatever brokers we can connect with around the globe, thanks to the third-party companies that are connectors. That would be CVLT is another, Commvault. Yeah, we're gonna, good one, good request. We're gonna go there. Bear with me here. I'm just making a note offline. I like that stock too. So to continue on, what I was saying about brokers is we are partnered with Connect Trade and Snap Trade. They make those API connections to brokers that allow the connections. We get a request for LRN. I'm going to write these down, guys. But with the broker connections, if a broker allows an API connection, then we can make it. There have been a lot of customers that have requested, hey, can you make connections to eToro and a few other players? They don't have APIs in place, unfortunately. But I will say this, Robinhood has a really sophisticated tech stack. I'm very impressed with the advancements they've done. There are a lot of, I won't say any names here, but there are a lot of other brokers that have been around a lot longer that are not making updates to their API or their tech or their, the different platforms within the platform, different platforms within the company. But I tell you what, Robinhood, they are a fast mover, and they are creating a lot of cool features for our customers. So hats off to them for doing that. But anyway, let's dive into Robinhood. So first thing on the list, this is an on-sale stock. Again, only 15% of stocks get there. You need a score of 50 or higher, which they have, and you need a margin of safety of 50% or higher. This right here, 80%, is a really good sign. This is telling us that EPS is increasing. In the middle, we have the 4M confidence booster. In fact, let's go through this. I'm going to see what score we can get today, just to see what refreshed is, because the score you saw is an average. All right, so mass part of Robinhood is all green, looking great. Meaning to the business, let's see what this looks like. We won't do the 4M of every stock today, but I want to walk through this in this case. Yeah. Payment for order flow, just for context, there's a spread fee or payment for order flow that typically, now you or I as investors, we don't really feel those fees because they're so low, but they do add up. Like, I'll give you the numbers here. Robinhood generates over $3 billion a year in revenue. Well, in fact, we'll look at their financial statements here in a second. And about 50% of their revenue comes from those transaction fees, which essentially is you've got spread fees or payment for order flow, or PFOF, if you'll hear that phrase if you're in the finance industry. All right, so interest on cash balances. Yep, margin lending. You're lending to invest in stocks. That's a big revenue generator. They got the gold subscription. I'm familiar with that. Stock loan program, great. Crypto trading, inactivity fees. That's right. If you're not active, you're going to get a fee. That's smart. Options trading is always a great one for a lot of brokers. Advertising, that's easy, low-hanging fruit. And data monetization. Awesome business model. Let's keep going. Meaning of the business. Yeah, wow. Their alpha is 233%. That is outstanding. All right, next up here, this is the meaning. This is, very specific to you or I. You can put whatever you want here. I'm very familiar with Robinhood, so I'm going to go very high. We'll move on to the moat section. All right, this is going to pick a few other businesses in the same sector and industry. We can see, all right, so first place on the summary. Here's some of those big names. Yeah. Got Schwab, Morgan Stanley, Goldman, Wells Fargo. All right, the score, they are second place. So Schwab, first place. Nice, looking good. Margin of safety. Revenue scalability. Yeah, look at that. See, here's a key sign. Who's making the most progress with the tech? Robinhood is doing a great job improving their tech for their customers. And the alpha, look at that. 233%. Outstanding. These others are beating the market, which is a good sign, but Robinhood is for sure standing out over and above. All right, let's keep going. We're almost done. We've got management's going to kind of summarize. All right, so management impact, only 5. Got it. We're looking at a few ratios as well in the equation. ROI, return on invested capital, return on assets, return on equity. It's a good way to also look at scalability of a business as well as the impact leadership is having on the business. Again, I give Phil Town, Warren Buffett, and Charlie Munger credit for that. But let's keep going here. Last screen. We've got our Glassdoor. I want to take a peek here. I'll go to Glassdoor. Unfortunately, there's no API from Glassdoor to Tykr. Glassdoor got rid of their API, so we can't automatically pull the data, but we do create these quick links. So let's go to our Glassdoor. And we are at a 3.6. And let's see about the approval. Okay, 75% on the approval. Okay, 3.6 and 75. Just update those. And let's click continue, see what we get. 77. All right, little higher than what I think the average is at, which is at 66. We want to see 80 or higher. So I wanted to walk through that to see if we could get 80. So we're pretty close, but let's keep going. Next up, the 5-year returns, as mentioned on the first stock, Intuit. We're looking for 80% over 5 years, and this is 291. And of course, as value investors, we shouldn't be using charts to buy and sell stocks. This is just a good perspective of where things are at. But we do like stocks that have pretty low volatility. I mean, the line is relatively flat, moving up and to the right. There are stocks in time that we've seen that they can be up and down. That kind of roller coaster you do not want to be on. So Robinhood, this is slow and steady. We like this, and I shouldn't really use the phrase slow or the word slow, because 291 is that's quite impressive. Another thing I'll say about Robinhood too is there are a lot of retail investors around the world, and thanks to the shift that Robinhood really started, which is the you can join a broker for free. That was already in place, but the free commissions, again, there's the spread fee and payment for order flow. Again, we don't really feel those, but they're still there. But that caused a lot of other brokers to follow suit and create these platforms with a low barrier to entry. So there's like, get this, over 300 million retail investors around the world on just the top 25 brokers. And Robinhood, I think today they've got, I think it's about 26 million. I could be wrong on that. That's the last time I checked. So massive, massive audience, and there's still room to grow. All right, let's keep going. Financials tab, revenue. That's looking really healthy. Let's go to yearly. Yeah, that 2.9, again, about 3 billion in revenue, but back to quarterly EPS. Yeah, that's what we want to see. We saw things change back, looks like 23. They flipped from a company that's not profitable to profitable. We saw the same behavior a little bit with Palantir. Once you make that transition as a stock in the public market, that's a really exciting place to be. And if you can hold that consistency and see the increase, your share price, in most cases, not all, is going to take off. We saw a big spike here. It looks like December of 24 fell off, but then we do see 3 quarters. It looks like 38 cents up to 44 cents up to 63 cents. That's a really good sign. All right, last screen here, earnings calendar. Nice. 3 quarters in a row is what we're looking for, and we've got 4. And I'm just looking at in history, when did they last miss? In 24, also in 23. So overall looking good. I think we're going to get a pretty good score here. I think this is going to be a 6 out of 7. Yeah. Nice stock. I do like Robinhood. Yeah. We'll roll these up at the end, but nice pick. Let's keep going. I think that was you, Sean, that brought that one up. I'm going to go ahead and add that to the watch list for today. Next on the list, we'll circle back to Mara. I want to kind of mix it up here. There was CVLT and Learn. So let's go CVLT. Then we'll circle back to Mara. All right. Commvault, or Commvault, I should say. I've liked this business for a long time. Big drop off. Let's we're going to look at what's going on here, but let's walk through. So this is an on sale stock, over 50 there on the score. Financials are really good. That's something we want to see. And then that margin of safety at 77%. So looking good. And then they are at 80 on that 4M. Outstanding. 5-year returns, 142. So we're, 5 for 5 on the 7. Let's go here to financials. EPS. Okay, EPS is decreasing. Wall Street does not like that. When you report your earnings reports and you go from 70 cents down to 53, down to 33, ouch. That could be a driver behind the share price decline. Let's go to earnings calendar, last step, and they did have a miss. Okay, so that's going to cause Wall Street to kind of freak out a little bit as well. Let's use Tykr here and just look at a few other things. So news, let's see what the latest news is. Commvault stock slipped on Friday. Motley Fool. I do like the analysts at Motley Fool. I think they, you might get some mixed reviews every once in a while, but I do like to hear what they have to say. All right, so major CFO change. This is something to keep in mind, and it's not a long-term thing to be worried about, but when you change up your CEO, or like the CFO is another big one, sometimes the COO, your chief operating officer, the share price can become a little more volatile. It drives me crazy sometimes because there are analysts on Wall Street that be like, uh-oh, we got a new leadership in place. Well, that can be a good thing. The board is putting them in place to help the company and, of course, help the shareholders. But sometimes the share price will freak out like, we don't know if this person is going to be able to run the company. Well, that's a wait and see situation. But after the market close, let's get into this a little bit. After the close on Thursday, Commvault announced CFO is departing, and the specialized tech company. She will step down at the end of the month to pursue an expected new opportunity. Okay, let's keep going. Replaced by an interim CFO. Chief Accounting, Danielle. Okay, Abrahamson. So we'll remain in place. All right, not a lot of big changes. As we search for our next, this is the CEO, looks like, as we search for our next CFO and continue to execute on our financial objectives, we do so with the support of a seasonal leadership team. Okay. Comings and goings, departure and time matters, always jarring to some. Yeah, like I said, it can be jarring. Again, nothing to worry about in the long term. It's like one of those deals where you might have a quarter of volatility and then you get a good earnings report and everybody forgets about it. It's kind of like legal issues. In most cases, it's not like the business or the stock is going to plummet for, into the end of time. It will. When we saw this, a good example is Meta or Zuckerberg being in court a few years ago for the data privacy issues. It's like that was a quarter or two, and they had another good earnings report, and it's like the market has amnesia. We forget about what happened, and the share price takes off. It's kind of ridiculous, but we'll keep going here. Should you buy? Okay, so that's it. That's really the negative they highlight. So that to me, that's not a risk at all. Let's keep going here. I'm going to use Gemini, but we're going to be adding a feature here in the very near future called the AI Investing Helper. It's going to have teed up like a few questions you can click, and it'll just that's your prompt. It'll just go to work for you, and you can type in. So in this case, I do use Gemini, but I'll be using this in Tykr when we launch it, which is what is the latest news on Commvault? CVLT stock. Please highlight the negative news. And why the share price declined. We'll see what Gemini has to say. What it's doing is it's scraping the latest news sources. It's probably looking at that 10K or 10Q. I'll quickly define those. Those are the earnings statements where all the data really comes from. So your 10Q, Q for quarterly, 10K is for annual report. Profitability misses. Yep, that's what we highlighted earlier, is that EPS declining. CFO transition. Yep, we found that pretty quick. Valuation concerns. Whenever you see, and if you read the onboarding within Tykr, looked at the calculations, P to E can be a misleading indicator, whether it's high or low. It can be good or bad, and that doesn't really help you with making a decision. Thanks to Investopedia, they have an article that's all about that, actually, on the P to E ratio, price to earnings, and the P to B ratio, price to book. So we at Tykr, we do not use those metrics, but I know some people do. But yeah, I ignore that. P to E, I don't care. Positive and neutral news, strong revenue growth, that's for sure. Reoccurring revenue is increasing, SaaS momentum, grew 30% year over year. All right, so let's keep going here with Commvault. We've got a 5 out of 7 on that. I'm just taking a look here, that EPS decreasing, and then the earnings calendar, had a miss. 5 out of 7. I like Commvault, but because I'm very particular to that EPS, what I would be looking at, let's take a closer look here. I wouldn't freak out if you own this stock, because if we take a closer look at that share price, let's go to the 3-month. This will give us a nice snapshot. They were at, what is that high? What is that, about a 195, I see, somewhere in there, all the way down to 121. Quite a drop off. This can be good if we see, let's say that EPS, it's going down. We see here that 0.7 or 70 cents. Let's say this next quarter jumps up to like 80 cents and they beat their estimate. This could cause this share price to turn around very quickly and start taking off like a rocket. But that is the key driver. You need to see that EPS increasing, because again, EPS is that's the number one line that generates the most activity from institutions. Essentially, you want a profitable company, and we were seeing the profits decrease. I mean, if your revenues are increasing, this is what I would do is I'd probably just chill out with hiring more people because employees are your biggest expense. Let your revenues climb and try to do your best with maintaining your current workforce size. That's a great way to, start increasing your profits. So that's the thing. If you're a Commvault investor, I would do that. Don't freak out. Hold it. Again, not financial advice, but that's what I would do. And if this starts taking off again, jumps up to 80 cents, you might see some really exciting action happening with that share price. That might start taking off. So good. I'm glad you raised this because I've always had this one on my main watch list. I do like Commvault. Let's go ahead, add it to our list, and we'll move on to next up. We got Marathon tomorrow. All right. With this stock, and this is something I like to do every once in a while if you're not very familiar, is go to details. You can get a little preview of how they make money, and then we can take a look at their site. So digital asset company that mines cryptocurrencies with a focus on blockchain ecosystem and generation of digital assets in the US. All right, so let's go to their site. What I'm looking for, when I go to a website, this will give you an idea. What I always look for is a product, service, or services, solutions. Like, how do they make money? If there's other ways, but let's take a look at we'll use the 4M tool to kind of guide us on that journey. But I needed a little reminder here what they do. I don't invest in them, but I have heard the name. When I hear Marathon, I think of like Marathon Oil right away, but I'm like, no, that's not it. This is something else. So yeah, thanks for bringing this one up. But let's go through the 7. So on sale stock, that's a good sign. 74 on the score. Over here on the right, that margin of safety is 73%. So we got 3 for 3, and pretty close to that 80. That 78 is looking good. But let's use the 4M. We'll cruise through here. I want to see what this what AI has to say about the revenue streams. Sometimes I'll see something that's kind of exciting, like another way they make money. So Bitcoin mining, of course, cryptocurrency sales. Company sells Bitcoin as mines, open market. Yeah, hosting services. Interesting. For other crypto for other miners. All right, that makes sense. Transaction fees. That's always you think of like payment tech businesses. Transaction fees are an easy win. Partnerships and collaborations. Yeah. Investment in digital assets. Energy sales company may generate revenue by selling excess energy produced from its mining. That's interesting. Okay. Research and development, consulting services, and tokenization products. Wow. A lot of revenue streams within. This is really good to know. Okay. Let's keep cruising here because this 4M is it is pretty quick. 107 on the alpha, looking good. Meaning of the business, I'm not the most familiar with this one. I'm just going to go medium. Let's see what it does with the moat. Okay. Some of these I'm familiar with, especially Riot. But Tykr first on the summary. Score there, second place next to Riot. Second place on the margin of safety, looking good. Revenue scalability, wow, they are outperforming everybody. That's great. And then Alpha is at their second to, what is that, Hoot 8, I assume. Could be mispronouncing that, but they're second place there in Alpha. Let's go to continue. Management, let's see what we get. All right, 7.5. And then the last screen, let's go to Glassdoor. Might have me log in here, but we can use the latest and greatest ratings here. This is an average. I see a 3.1 and a 71%. All right, let's click continue. 80, nice. All right, that's a good sign. Their average at 78, so it's pretty close to the average. All right, let's scroll down. We see here 132. A lot of volatility here in the past. I know crypto has that tendency because like we've seen recently with Bitcoin really falling, but share prices can go up and down very quickly, very quickly. So a lot of that behavior here. Let's keep going. 5 years, 132. It looks like way back here they were at, looks like less than $5. Oh, yeah, I see. Yeah, you're dropped from 19 in less than a month. Let me go to the chat window here. Riot. Yeah, Sean. Yeah, good call. Well, let's keep going. Financials tab. Revenue. Wow. That's looking really healthy, especially those last three. But let's go to EPS. Okay, so big decrease there. This is what we want to see. You get a company that goes from not profitable to profitable, but then it's moving in the wrong direction here. So I know institutions, again, they don't like that, as we just saw with the previous stock. So worth keeping an eye on. Hopefully they bounce back up. And then the last step here is earnings count. Ooh, a lot of misses here. Oh boy. Yeah, institutions don't like that. That's just going to hold the share price down. Unfortunately, when you have those earnings misses, institutions do sell off quite a bit. So I think when we go to 7, 4 out of 7. Yeah, so interesting stock with this one. I get the play. Like there's people who like to invest in utilities of certain things, which is kind of like the pickaxes and shovels play from the 1850s. You think about the 1800s, people wanted to make their fortune mining golds, and the people that actually made money weren't the ones mining gold, as the one providing the pickaxes, shovels, and even Levi jeans came out at that time because it was a stronger pant solution. So I kind of look at Marathon as that kind of like a utility play. Yeah, and you're right, seems tied to the Bitcoin price. I'm looking at the chat window here. So I'll add it to the watch list. I'll tell you this right now, not the strongest stock on the list. I like businesses like the businesses I invest in. There's a lot of use cases. There's a lot of, first off, a lot of revenue streams and a lot of use cases of different types of businesses and industries they can solve. For example, Microsoft, it's not my highest flyer, but you look at like Microsoft Office 365, you name your large corporation, well, I shouldn't say large, small, medium, or large, they're using Microsoft Office 365. It's such a powerful suite of tools, and it doesn't really matter what industry is using it. It's just everybody really needs, email. You've got Outlook, you've got Word, Excel, PowerPoint, list goes on. Another one is Fortinet, is another stock I hold. Cybersecurity. Again, it doesn't matter if you're a healthcare institution or you're, in the travel industry or you're another tech company. It's like you need cybersecurity. So looking at that, but whereas it seems pretty focused in one vertical, which really happens to be everything around Bitcoin. We did see the revenue streams. They do have a lot of revenue streams there, but I just see a little bit of a risk there. Like you said, Sean, share price of Bitcoin goes down. This one does kind of correlate. It does drop a little bit. And with Bitcoin falling over the last few months, we do see your share prices falling quite a bit too. So I think it's overall added to a watch list, but I don't think I would start buying a bunch of this stock quite. Yeah. So that's Marathon. Let's keep going here. Next up, Learn. I just did a YouTube video on this stock, so it's pretty relevant. We can walk through. All right, the first thing, okay, on sale stock, 89. I mean, that's impressive right there. You got a share price at, or I should say a score over 50. Getting above 80 is one thing. Getting close to 90 is actually pretty difficult. Margin of safety at 80%. And then 88, I mean, that says a lot right there. 88 on the 4M. Share price, 178 over the last 5 years, but we see this massive drop. And I'll speak to that right now. So the reasons were Number one was, I believe I'm doing so many stock reviews. There was poor guidance. Again, what we think will happen in the future. It's not what did happen, which drives me crazy. But then there's a class action lawsuit related to like teachers' licenses is one thing, and then inflated subscription numbers. So it's one of those things where I think like it kind of corrects the behavior of leadership. Like, you shouldn't be inflating any numbers, or if anybody internally is reporting numbers, like, you have to be extremely accurate. So they kind of have to get their act together a little bit. So I think hopefully leadership has learned a lesson here, because it's got like 70% of the market share in the US. The homework I was doing, serving K through 12 schools, like teachers are using it, students are using it. It keeps your curriculum organized in one clean location. It is quite an impressive product. So hopefully, again, this was just a temporary event, and this will lead up to what we're looking at next, which is the EPS. Let's take a look here. If we can continue seeing, like, this is going in the right direction, 2 quarters in a row, but not 3. So we're not going to get a total 7 out of 7, but we see $1.19 up to $1.59. That's quite a jump. That's really impressive. Let's say we see this 159 go to like 180. That could really cause the share price to take off. And you've got no other legal issues or other bad news. This might create a clear runway for takeoff, if you will. The share price could really get moving. Earnings calendar. Yeah, 2 quarters in a row. That's right, as opposed to 3. So I think when I clicked on this, when I did the YouTube video, it was a 5. Yeah, 5 out of 7. Yeah. As you guys can see, like this feature here in itself really rolls everything up. You can save a bunch of time. In fact, I'll jump over to the stocks page. I'll show you a quick hack, but let's add this to the watch list. We'll go to assets, stocks. And this is kind of if you guys want to save a ton of time, you're going to see this number change, like 57,000 stocks in Tykr that will change every day because there are stocks going public and others going back to private. But let's do this. We're going to add a filter on the 7, just to show you guys perspective here and how rigorous this tool is. So 5 out of 7 is going to greatly reduce this number. Let's hit apply. It's going to change it to 1,000. So 5 out of 7 is pretty hard to get to. Let's go 6 out of 7. We get to 265, which is really hard to get to. And then let's go 7 out of 7. 32 stocks today. I think last time I checked, it was like upper 20s or something like that. So you can see what's on this list, just to highlight, like Fix. They're in the heating, ventilation, air conditioning space. Vertiv, another tech company. Fortinet is a stock I hold. Cybersecurity, NVIDIA is a stock I hold. You guys know that one. Powell, energy space. It's hard to get to a 7 out of 7, but it's kind of a little time saver. And if you'd like, I got numerous filters here, but you can save that filter, so you can just log back into Tykr. You can just see the scores, and there you go. So overall, we got a good list here. I want to take a look, and we might have time maybe for one more. And you know what? Let's make it happen. You guys go in the SoFi. Sean right away, SoFi. You got it. Let's take a look at SoFi. We'll make it quick, and then we'll roll them up at the end. All right. All right. On sale stock, 74 on the score. That's looking good. 79 on that margin of safety. That's looking good. And then 61 on the 4M. We see here this share price is really taken off. We go back in time here. It was like in July of 24, looks like about $6. Now it's up to 27. Wow. Looking good. 154 on the 5-year returns. That's what we want to see. Let's go to the financials tab, have a closer look. Look at how healthy this is. And if you guys are curious, like if you don't know much about SoFi, their website is other banks should take a note because they have done a great job with look at this products page. This is ridiculous. Yeah, Sean said they're a marketing machine, 100%. Yeah. Very, very well aligned with a lot of brands. They're very good at marketing and advertising, but look at all these revenue streams: mortgage loans, personal loans. You can invest, robo investing. I mean, powerhouse money-making machine. Let's go back here. Financials, that EPS, see that inflection point going from, again, not profitable to profitable. That's a really special place to be as a business. Sometimes you'll see a business jump up to positive and then it falls back off. That's like, you want to be careful there. Just because it's one quarter doesn't mean you want to pile in yet. But when you see the consistency here, that's a really good sign. And that, I can tell you right now, is the key driver of why the share price is driven or gone up so much. Especially look at these last 3 quarters: 6 cents up to 9 cents up to 12 cents, 3 quarters in a row. That's what we want. That's great. Earnings calendar, our last step on the 7, nice and consistent. Look at that. Not just 3%, it's 32%, 30%, 83%, 115, 385. Wow. Looking really good. I think we're going to get a 6. Let's see here. 6 out of 7? 6 out of 7. Wow. Outstanding. I'm pleased. I've had my eye on SoFi for years, and it was like, yeah, their financials just weren't the strongest, but now they're, what this is telling us is, we'll add this to the watch list first, and I'll kind of speak to this. If we're on their site, this is a situation where you've got all these revenue streams, and it can be very tempting to, as you increase your revenue, you're going to increase your payroll. You're going to hire as many people as possible, which is fine. You're giving people jobs, but you often have to balance that and think about your shareholders, because if your revenues are increasing really fast, but your liabilities, that payroll is increasing just as fast, you're not doing your shareholders any favors there. So let that revenue just rocket and try to optimize your business as much as possible. Don't overhire, but hire essential roles, because then you're going to see that EPS continue to grow. And that's what you want. We start seeing numbers like, let's say, jumps up to 20 cents or 25 cents or 30 cents. I mean, then you not only, like Sean, you not only have a marketing machine here, but this is a really financially strong business. And that share price will continue, in most cases, continue with this type of behavior. I mean, that is like an uphill climb in the right way. That is beautiful. When I see a stock like that, like, let's look down here. It was at $10 in just a short time period. Look at that, April 25 up to 30 at this peak, $32. Wow, that's great. All right, let's roll. Let's kind of rank order these. We're over on the this watch list I created. Went through 6 solid stocks today. That's great. What I'm going to do is I'm going to just sort this by the 7, and then I'll give my thoughts. So yeah, this aligns with what I was thinking, as I do like SoFi and Robinhood the best. I would probably put SoFi on top. The reason is more revenue streams, more industries, more customers. I believe their upside is higher than Hood. I mean, Tykr's in the retail investor space. There's a lot of upside here, but as we saw on SoFi, I mean, look at those products again. You've got so many different ways to generate revenue. I look past the first one. Student loans is one. Home equity, crypto's in there. Insurance, there's a nice consistent. You got auto, life, homeowners, renters. That's a powerful business right there. Yeah. So I would put SoFi, then Hood. Then, you know what? Yeah, Commvault third. Then I'd probably go, gosh, it's tough between, I would probably go Intuit, then Learn, and then Marathon Digital at the bottom, just because they're so focused on the Bitcoin industry. Again, I'll kind of summarize those: SoFi, then Robinhood, then Commvault, then Intuit, then Learn, then Mara. So again, not financial advice, but there's a few few strong businesses in here, and I'm looking at SoFi Hood, really close. Those are strong. I see long-term upside potential. You just think of the industries they're in, though, and you don't see them slowing down anytime soon. And as long as they keep their financials together in check, they're increasing those profits, that EPS, and they've got no bad news, no legal issues. I think you guys as investors, you're gonna do pretty good. So good selection of stocks. I know we're at time here, just 2 minutes. I didn't leave any questions about the platform or in general, but you did hear previews of what's coming soon, like that AI investing helper. We're very excited about that. And we're going to get to work here soon on the real-time pricing. Hopefully early 26, Q1 of 26 is the goal there. That's another big feature we're going to start on in the near future. So cool. Any last questions? I know we got like a minute here. Otherwise, good recommendation. Yeah, go ahead, Sony.
So do you look at the ratios like Sortino and Sharp ratios?
I do not. I know if you were to click on a stock, you can go to ratios tab. This is really in place. A lot of customers asked for these, and people will use them as another layer of confidence. But I found, thanks to Phil Town and his books, really looking beyond the ratios, just really looking at the revenues, the EPS, those are the keys. Really, EPS again is the big one, but then rolling everything up to the scores and Tykr is what matters. But yeah, ratios, yeah, I do not use.
Okay, thank you.
Yeah. Sean had a question here on how do you get the 7 filter? Yeah, you go to assets, go to stocks, and then you'll see you can personalize this. I'll show you. This is handy. If you click on personalize, you can turn on and off columns. There's a lot here. You can kind of turn on and off. I make sure the 7 is on, and then you can arrange the order. Simple as this. You can just drag up and down, hit apply. I like to see, just to give you guys a little pro tip here, I like to see the summary, the score, the margin of safety, then the 4N, then the 7. It kind of rolls everything up. And then I like to see share price, revenue, stuff like that. But that'll save you a bunch of time if you want to create that filter, and then you can save it right here. So cool. Any other questions? Otherwise, I'll get another one of these on the calendar for January. Cool. All right, guys. Thanks for joining. Good questions. Good list of stocks. And we'll talk soon. We'll see ya.